Let's chart DAG. All right, DAG. Oh, I'm pushing buttons. Hang on. There we go. Let's do DAG. All right, pull it up, and here we go. He said, I'm here. I got in at 2 cents. And just buying below there, roughly about 3 cents. He said, yes, sir. Sweet. So I got DAG pulled up on the chart here. First things first, note, she is approaching bear market lows again. It's under a ton of pressure. I don't like the fact that it failed this trend line right here. All right. See it right here. This was our trend that we started back at the end of 2024 when we had that push up that a lot of other coins had, right? They had that push up, and that was kind of the end so far. What's scary here is that it ran up and hit this 50 fib. And when it ran up and hit this 50 fib, that's the continuation line. You can get over it, continue up, reject it, get forced back down. This one got forced back down, and it really hasn't stopped coming down since. That's kind of worrisome right there. I don't like that it failed this trend line over here. That's another worrisome thing. It fell under the 236, and that 4 cent level continues to be a very, very stiff barrier, a very, very stiff barrier. All the moving averages are pressing it down, 150, 208, 21. I do like the green volume that it's had today. That's a good sign. And I would really, really like to see, pushed the wrong button. I would really, really like to see this thing get back over the 821 and at least challenge that 150 moving average right there at about 4 cents. That 4 cent is a booger. And if 4 cents breaks, 5 cents is also going to be a booger. Both those levels are going to be very difficult to get through if it can get through them. Let's talk about what could be. Here's another reason why I say it's going to be tough to get through. Same level right there. 236, 150, 821, all balled up in that one spot right there at about 4 cents. Roughly a little bit more, but close to 4 cents. All right. If you get above that, remember that 200 was pointing toward 5 cents. Now the weekly 200, look at the hook on that weekly 200 moving average, pulling down there, pointing downward. What's up, China Matt? Good to see you, brother. It says, send it to grandma. Let's go, dude. That's actually awesome. Thank you. That's China Matt's great, dude. Thank you, brother. I needed to laugh, dude. I haven't laughed in a couple of days. That felt good. Thank you. Again, 5 cents, that thing's hooking down really aggressively. I'm worried that it's going to pin the price down a little bit too. Now, I'm going to remove these weekly fibs here. And I want you to look at this move right here. It's a big move up, and then it started retracing its steps back down. We measure these retraces and find probabilities in them of where the retrace may stop. Grab the low, we'll grab the high, and we'll drag it right and use that diagonal line as a trend line. Right? You can kind of see right there that red line's roughly in the same spot. So just use the trend line here, the red line as a trend line, and don't worry about the dotted line for a moment. I just want you to see it a little bit more zoomed in. All right, so there we go. There's weekly fibs from the bottom to the top, and now we're measuring how far it's failed on the way back down. All right, so far, we failed the 236. That's pretty typical. We failed to 382, and look, it rejected it on the way back up. Look, you failed this level, and then it rejected, just couldn't get through it. Bam, pushed down to the next level. Got under this, rejected, broke it. Now rejecting. Now we've come all the way down to the golden pocket. The golden pocket is between 0.618 and 0.71. Some people will say it's only 0.618. That's fine also. But I like to give it a little bit of leeway, man. This is crypto. Nothing's perfect in crypto, right? You're trying to get close as you can. This is why we do this. I want everyone to see how we get as close as we can. All right. So far, we're holding on to the golden pocket. It absolutely must hold on to 3 cents. If it falls below 3 cents, she's in trouble, and she's coming down here to the sniper's alley levels of 2.5 to 2 cents. That's going to be rough if it comes all the way back down there. So far, it hasn't shown any signs that it wants to get up out of the mud. Here's your RSI. She's still super flat and down. Not much help there. MACD, hey, here's a glimmer of hope. Looky here. So you got a MACD cross. Remember earlier I said when you got those MACD crosses up here, that's maybe a sign to scale out. Well, now you're getting a MACD cross down here after all that red volume, getting some green in here. That's not bad. I only worry about the upside of this thing getting stuck at 4 to 5 cents. There's not a ton of upside unless you get past that, right? It's going to be a bit of a pain to get through that. I don't want you to get stuck in the mud. Bunch of other assets out there to buy. Be careful, you know what I mean? Don't get hung up on one. I know some influencers will tell you, hey man, get hung up on this one. This was the best and the greatest because of this and this and this. But that's all subjective. What has that really done for price? And the answer is a bunch of nothing, right? So be careful on this one. It's not quite where it needs to be. I like today so far. That's a good push today. Be careful. She's under a lot of pressure. She's under a lot of stress and a lot of resistance. This needs to break and break hard past that 4 to 5 cent level. That's the major holdup for now for DAG.